let's go to our guest, Dr. Arun Leslie John, who is Senior Market Analyst at Century Financial. Welcome with us at CNBC Arabia. First of all, let us talk about what we see today in the UAE markets. We have some drop in the markets, yet we can see a clear profit taking end of this year. How do you explain this buying, especially the big stocks?
So, some profit taking by the end of the year is generally expected, as a lot of retail investors as well as large institutional investors might be trying to show some good numbers in their books. Now, in the midst of all this, let us not forget that the US Federal Reserve has decreased the interest rate by 0.25 basis points, and the outlook for the next year seems to be looking good. So any dips in the markets are likely to be accompanied by buying at lower levels to take advantage of the good market conditions. Now, when we come back to specifically UAE, we know that the macro conditions are generally looking good. Now, let us not forget that UAE, for instance, has an economy which is about 3 by 4 or almost 77% of the economy is dominated by non-oil trade. Now, the non-oil part of the UAE economy is growing at a much faster pace than the oil part of the economy. Non-oil part of the economy this year is expected to grow by more than 5% per annum, and next year in 2026 also it is expected to grow by more than 5%. So these sectors that we're talking about, whether it is insurance, whether it is banks, whether it is consumer related names, so their fundamentals, their underlying fundamentals, especially for the UAE focused names, looks very good, and they dips in these names because the macro economic scenario is good are likely to be buying opportunities. One more thing, from a chart perspective, DFM, Dubai Financial Market, is about the 50, 100, and 200-day moving averages. ADX, once it closes about 10,000 levels, I think technically ADX also will be looking very strong.
Since you're talking about specific sectors, Mr. Aaron, we have the AI sector, which is being heavily invested in by the UAE and Abu Dhabi specifically. We have a lot of AI solutions, such as in Preside, Space 42, and other stocks. So why don't we see the strong correlation with the movement in the international markets, meaning by it, the global markets, when it comes to the AI stocks, they are dropping, but in the UAE, the situation is different. So, do you believe that in the UAE we have a bigger trust in the companies here?
So the major reason could be that in United States the AI stocks had been bid up a lot. So there was a lot of extreme valuations in some of the AI related names, but that's not the case with UAE. So UAE AI, should be, even though it's like AI, now AI, whether it is in US, whether it is in Europe, whether it is in United Arab Emirates, they are trading with different fundamentals. Now, AI is a major theme inside United States. The growth is also very good there, but unfortunately, the cycle this cycle saw some stocks rallying a lot, and which was much ahead of the fundamentals. So in the US, what happened was that a necessary correction took place, uh, but in UAE, comparatively speaking, the gain in the stocks was relatively muted, especially when compared to what is in the US. So I would guess that UAE right now is relatively safer from the correction that we expect when compared to the correction that we saw in United States.
Final question to you, Mr. Aaron, regarding the valuations. You pointed out to the valuations, but I want to talk about the valuations of the stocks that entered newly the markets. The stocks that have been listed lately are being traded below the IPO, such as Talabat and others. How do you explain the drop in those stocks for the latest IPOs? Are there overvaluations for those stocks, and how do the investors view those companies?
So, look, it's slightly complex problem in the sense that, for example, when a company comes in for an IPO, whether it is Talabat or whether it is Lulu, so the investors behind these companies or the promoters of these companies or the founders of these companies, they want to maximize their value. So what will happen is that the founders, whether it's behind Talabat or whether it's Lulu, they will try to price their share at the maximum possible level, depending upon the market conditions. Now, on the other hand, for a person who is participating in the IPO, whether it is a retail investor or whether it's an institutional investor, they might want to buy the stock at the most attractive value or maybe at a lower price, as low price as possible. Unfortunately, in the case of Talabat and Lulu, what happened was that the stocks were priced for perfection, in the sense that stock was priced at the maximum possible valuation. There was no margin for error. So when the secondary trading started in the market, these stocks were subject to a correction, and the correction was due to their slightly higher valuation. So the retail investors who participated in it naturally suffered a loss because the people in the market, the secondary market participants, were not willing to buy these shares at a high valuation. So they suffered a correction. In the future, I, my personal suggestion would be that the companies that are coming in for an IPO should give some leeway to the people who are subscribing for the IPO. I mean, they should not price their um, IPO at maximum valuation. They should price it at some discount to the market valuation so that people who are participating in the IPO, for investing in the IPO, will also be able to see some gains on the first day. So, to put it in a nutshell, to shorten it, I would say it is a valuation mismatch which has resulted in a correction of the shares of these IPOs.
Thank you so much, Mr. Arun Leslie Jones, for being with us live from Century Financials. Thank
Thank
you.
you.